Hello guys, today I'm going to do a quick video about a signal and an EA that you can buy on mql5.com. One of the viewers of the channel requested that we take a look at this EA, so I'm happy to do that. This is an interesting EA. It's a scalping EA. So first let's look at the trading disclaimer. I'm not a financial advisor. I'm not telling you to trade. Trading is very risky. This channel is only for entertainment. You should seek professional advice if you're considering any type of investment. Anyway, having said that, let's look at this EA. First thing is, let's look at, before we look at the signal, let's look at what we can find out about the EA. So the author is Profalgo Limited. I think I think my trading partner knew him or knows him. I think he's a Belgian or Dutch fellow, but I can't recall for sure. Seems fairly professional from what I can read on his comments and reviews, his review responses. He says here he's got a signal with 3 years of live results. Advanced Scalper is a professional trading robot that has been in development for years. Has a built-in spread filter and slippage control algorithms. Of course, for a scalper, which is going to go for low pips, you definitely want a spread filter. Slippage control algorithm is interesting. So we'll talk about that in a sec. Fully customizable. It's very customizable, I would say. I took a look at the manual, and it has a lot of settings that you can customize. Broker IC Markets. I like IC Markets, but this is just a recommended broker, honestly, guys. You can run it on any broker, but your broker is going to need to have good execution, good spreads, or you're not going to make money, because this thing is going for very low pips. It's a scalper. He gives a recommended VPS. Any low latency, fast VPS is probably where you want to run a scalper. If you're running some other type of a long pip strategy, the VPS hardly matters. And the broker doesn't matter as much. But for something like this that is making its money on very small pips, yes, you want a low latency, fast VPS, and yes, you want a very good broker. So he says it can be applied to any low spread market that has good liquidity. He recommends these three pairs. Of course, these three are heavily traded pairs. We'll have low spreads. We'll have less problem at market changeover. When the U.S. market shuts down, the spreads won't widen as much. So yeah, these sound like good candidates. Main characteristics, strict use of stop loss. Yep, I verified that looking at the trading history. It does have strict use of stop loss. Advanced stop loss management. It looks to me like stop loss is managed by trailing and also by a slippage control strategy. So let's talk briefly about that slippage control strategy. If I look over here at the manual, it says slippage control mode. Select which slippage algorithm will be used. There are several slippage algorithms you can use. Basically, I think what it's doing is it is based on your settings. It is checking how close we are to the slippage settings that you set, how close the price is to the stop loss, and then it's manually moving the stop loss on the broker rather than keeping the stop loss in the EA. It's setting the stop loss on the broker so that if there is a slide of the price in your direction, it'll get closed on the broker to control slippage rather than having you try to control it from the EA, which is, I think, a good strategy. At least I think that's how it's working, but I'm not 100% sure because I don't own this EA and I haven't watched it. I'm just kind of deducing that from what I can see here in the settings. So interesting, sophisticated strategy, I would say. It survives strict high-quality back tests. Exit strategy can be used on manual trades or trades from other EAs. Back tests with real variable spreads, commissions, random slippage, 99% tick quality. That's good. Proven live results on high balance with several different brokers, minimum 150. What else does he say here? It's got a news filter. Somewhere in here it says that. I can't find it right now, but there's a news filter on it. So yeah, a very sophisticated, I would say, scalper. So the name Advanced Scalper is appropriate. Very customizable, some really sophisticated strategies involved. Seems to have made money in the long term. So what I see here makes me think this is a pretty good scalper. It is entering based on a breaking of previous highs and lows. So if we look at the, let's see if I can find it. So if we look at the manual here, basically you can set it so that it will enter based on previous highs and lows, and then you can specify how many candles you want to be to the left of that previous high or low that are lower in the case of a high or higher in the case of a low. So in other words, you want to make sure it's a legitimate high or low. In other words, if there were, let's say, a low here and then 2 candles to the left, there were another low, then you might not want to count that low because it's not a very strong low if we just had a lower price 2 candles ago. The same thing for the high. You want to make sure that there's X number of candles to the left of it to show that it's a legitimate high. He also recommends trading on the H1 or the H4. Generally speaking, in trading, the higher time frame you look at, the more you can expect that market structure, those highs and lows, if you subscribe to the theory of market structure. And I'm not going to get into in this video whether market structure is a good way to trade. I mean, that's a super complex topic, and there are lots of views and approaches to using market structure. So, there's like order flow analysis and rebalancing and all these different theories that apply to market structure and when you can use it, when you can't, how it can be used. That's way beyond the scope of this video. So, but let's just say that you subscribe to market structure, then this is probably a decent way to ensure that your structure is valid before entering a trade. So that's interesting entry strategy, and probably a pretty good entry strategy, I would say, if you want to get something that's workable and that you can use in live trading. It's probably a decent way to go about it. So I like that. Okay, so back to his page. If we look at his page, we basically looked over this page. If we scroll down on his page, we see here some long-term live results. And let's just copy this here, and then let's look at the trades on, for example, which one do we want to look at here? Let's look at, I think this one will work. So if I show here his results, we have 2018, which is this. So this is actually from his demo. So it's not live results because this one is a demo account. You can see here, Tickmill demo. So let's look at this account briefly. Of course, it's some insane return, 103%. So then if we look at his, you can see here linked his live account here. So let's look at his live account. So this demo has been running since 2018 April. Then we're going to look at his live account, which has been running since 2016. And the live account only has 1,649% return with a 43% drawdown, while the demo has 103,000% return with a less drawdown, 32%. Why is it that the demo has a crazy return and a lower drawdown in a shorter period of time, while the live account has a higher drawdown and still a good return, by the way? We can't sneeze at this return in a longer period of time. Well, basically what we can say here, and I looked at this signal with my trading partner Paul, we had a lot of discussion about it. What we can probably assume here is that on a demo, first thing is Paul mentioned that he knows that Tickmill broker has a reputation for having very different demo prices than they have on live accounts. So that's the first thing. So demo prices on Tickmill don't match live prices on Tickmill. And you notice on his live account, he's trading on Infinox Capital, which I don't know much about. On his demo account, he's trading on Tickmill Demo. The second thing to understand about live and demo is that when you're on demo, you generally don't pay any commission, and commissions are important on a on a Scalper EA. Why? Because on a Scalper, you're going to trade very high lot sizes, and you're going to trade very often to only make a little bit of money. And brokers don't care. Well, commission charges don't vary based on how many pips you're making. They vary based on how many trades and what lot size. So if you think about it, if you make a lot of trades with a high lot size, which is what a scalper does, you are going to pay a hell of a lot of commission. So not paying commission on this demo artificially inflates his returns. Here on a live account, he's not paying commission, but anytime you see a broker not paying commission or not charging commission, what this means is they've rolled the commission essentially into the spread. So you're going to have a much higher spread on a non-commission account. What does this mean for a scalper? Well, it means the scalper makes a lot less money, because if your spreads are worse because you're not paying commission and the broker has to make money somewhere, or they're going to make money somewhere, it means your spreads are higher. So that's another reason that his long-term, or a reason that his long-term, his real account is not making as much money. Because yeah, it's not paying commission just like the demo, but the spreads are going to be higher because the broker is going to make their money one way or the other. If they're not going to make it on commission on a live account, they're going to make it on spreads. So this is really not a very good environment to judge anything. A demo account on Tickmill, which is a broker that doesn't have same prices on, at least we think, on demo and live, and not charging commission, and probably has razor tight spreads, even though they're not charging commission, because generally on demos, broker will give you the live spreads, they just won't charge you commission. So you save a lot of money. So in my opinion, I would just completely ignore this drawdown and this profit. In fact, I would completely ignore this entire demo account, because what you're probably going to find if you try to use this demo is you're not getting anywhere near the returns that he's getting. You're going to have losing trades where he has winning trades. He's going to have big winners. You're going to have small winners. It's just going to be a disaster trying to use, in my opinion, a demo account to copy a scalper. And I would guess that's probably what his reviews say. I mean, he's got 3.5 stars, but I would guess that he's going to have a lot of, traders that are trying to copy this to either a demo or to a live and getting much worse results. So for purposes of this video, we are going to completely ignore this demo account. And let's look at a more realistic account, which is a real account. So looking at the real account, we're going to compare its results. Let's find the results to what we saw on his page on the EA. So he says this is long-term live results. Is it long-term live results? No, it is not live results. It is demo results. When we compare it to live results, we get something very different. So if we look here, the third line is the 2018 line on this live account. And if we look at it in 2018, the third line, we have a September that lost 28% on the live account. When we look at 2018 on the demo, it lost 15% in September. Then when we look at the live account lost 6% in November of 2018. The demo made 2% in November 2018. We look at the live account lost 13% in December of 2019. The demo account made 8% in December of 2019. And on and on. I mean, another example is July of 2020, the live account lost 6%. July of 2020, the demo made 12%. So as you can see, this is not a live account. This is a demo account, and it bears no real resemblance to what's happening on a live account. So just wanted to point that out for you guys. Okay, so let's look at the results on this live account. He's got no subscribers. He's been running for a long time. Reliability is poor. Holding time is 40 minutes. Great. We have a low holding time. He added it to MQL right here around trade. What this is, 3,900 or so is when he added it to mql5. Previously, it was running on his own account but not linked to mql5. So probably sometime in here, we can say it might have been added to mql5 sometime in 2019 or maybe even 2020. But the results, when I look at 2000, let's say 21, 20, and 19, look, I would say similar to the results in 2018 and 17. So it's not a big alarm bell that he just added it to 2000, added it in maybe, let's say 2019 or 20 to his MyFX, or sorry, to mql5. The only thing that's kind of an alarm bell is that if we look back at 2016, we can see he got a ton of growth, 277%. Is that repeatable? As we've discussed on this channel many times, I'm just not going to go into it again. If you have early results on an EA that are kind of ridiculous like this, then generally you don't want to consider them. And there are reasons for that I've discussed in other videos. The EA has taken some recent losses, but overall you can see a lot of recent gains. Why are the recent gains so much more in terms of percentage than the previous gains? It's probably just a result of two things. Number one, compounding. So as an account increases in value, you start to get a lot of growth on the account because you're just trading more. So it's compared to your initial or your old balances, you're trading with bigger lot sizes because as your account gets bigger, it just gets progressively bigger. So that's the first thing. And then the second thing is that it had a couple of really good months in the end of 2020. It had August 35% and November 27%. October was also good, 15.5%, and December 11%. So out of the last, 5 months of the year, three of them were awesome months, and one of them was a very good month. And then even into this year, he's carried on with 3 very good months, although he had a losing April. So you can see, since we've compounded and our lot sizes are much higher, a minus 12% month is kind of a disaster when you're trading with such lot sizes because you go down a lot. So that's kind of a quick look at what's been happening with the account. If we look down here at equity, equity is very close to booked balance. So not a lot of drawdown hanging around here. If we go up and look at his trading activity, 8.7%. So he doesn't trade very often. Latest trade 4 days ago, that bears that out. He just doesn't trade that often. Max drawdown 43%. Well, given that he survived, if the numbers before he added it to mql5 are accurate, and of course anything that is from before you added it to mql5 you have to be a little bit suspicious about, and the fact that he's trading with a broker I haven't heard of doesn't help my mindset here. So I have a little bit of a hard time with everything before 2019 or 20, but given the fact that this guy is seems to be a fairly professional trader or professional EA author, I'm inclined to give it credit. So let's say drawdown of 43%, not bad. If you've survived since 2016, that's 5.5 years of survival, gaining probably, I don't know what this averages out to. I should have calculated it for you guys, but compounding plays a large role here, but probably gaining 5% a month, something like that. So quite good long-term survival, pretty darn good max drawdown. Deposit load, not so good. So here he's on a 1 to 300 with 72%. You have to multiply that by 3. He's around 215 or 220%, or sorry, 215 to 1 or 220 to 1 leverage, high leverage. But this is a scalper. Scalpers don't hold that leverage very long. They get in and out, and they have to trade big lot sizes because they're going for small pips. So if you're going to get 1 or 2 pips, you better trade big lot size if you want to make any money. So it's somewhat understandable that his deposit used is high, but you need to understand that if you're on an account, guys, let's say you have a US account 1 to 50 leverage, or let's say a UK account 1 to 30 leverage, or something like that, or an Australian onshore account 1 to 30. It's not going to work because you're swinging 210 to 1 leverage or 220 to 1 leverage with this EA. You're not going to be able to trade the way this EA is trading on those low leverage accounts. You need a big leverage account. See, he's got 300 to 1 here, and he almost hit 300 to 1. You need a 300 or a 500 to 1 account to trade the way this thing's been trading, period. I mean, that's clear from the deposit load. Profit and loss trade. So he's got a higher percentage of profit versus loss trades. Why is that? Well, he's not trading a grid as far as I can see. It's just that he has a trailing stop mechanism. And so anytime you have a trailing stop, you're going to get smaller gains, but you're going to win more often because if it goes into profit, you lock in the profit with a trailing stop. It means you get a higher win percentage, but you get a lower win pips. So let's go to trade. Speaking of pips, I won't go into trading history a lot other than to say, you can see he's setting a lot of those buy stops and sell stops, which ties back into that high and low strategy we discussed. So, once we basically set a buy stop here, a sell stop here. If price goes below those levels, then boom, you're in. So that makes sense that he is using a buy stop or a sell stop. Then if we go to statistics tab, if we calculate this out, we've gained about 20,000 pips. We've lost about 12,000 pips. We've taken about 6,000 trades, so we're at something like a 1.3 pip per trade is what you're making, which is extremely low. Even for a scalper, 1.3 pips on average is not much. When I trade Forex Fury, I'm getting something more like, let's say, 3 pips or 4 pips per trade on average. So this is very, very low pips. Part of that's because he's using a trailing stop, though, so he's trying to get that, more wins. But of course, that should play into giving you a higher pip average because your wins increase your pip per trade expectancy. What else can we see here? So I don't love what I see here at all. Let me try to make this simple. I'm not a big fan of 1 pip strategies in general. So that's, to me, a mark against it. Okay, trading on the 3 pairs that he recommended, Euro USD, USD JPY, and cable. Those are, low spread. You should get good fills on those currencies if your broker is decent. So that's why he's trading there. What else can we look at here? Let's take a look at risks. Risks are fairly low here. I mean, he's in and out, in and out, in and out. Deposit load was high back in 2018. His drawdown is generally reasonable for the time that we can see here, although probably there's some spike in drawdown that's given him his overall drawdown. So, overall, guys, not a lot here to criticize other than execution risk, low pips. Pretty sophisticated EA, seems very well supported. So let's look at the description. So this is sort of what we saw on the other, on the documentation and on the EA page. Reviews, we've got this guy says sucks. This guy says no rating, gave it a 1. This guy says he's making money as of 2017. That's a pretty old remark. I don't know how much weight we can put there. And this is 2016. Gave it a decent review. So not a lot of reviews on this signal. One thing I would say is if you are going to use this strategy, it would be, in my opinion, a terrible idea to buy it as a signal. The reason is you're probably not going to get very good execution because if you think about it, what's happening with the signal is the EA is running on the author's VPS somewhere. Then the trades have to be, and they're executed on his broker from that VPS. Then the trades have to be sent through mql5 to your MT4 or 5 terminal and then sent to your broker. So all that time, if we're running a low pip scalper where execution, slippage play huge roles, all that time going from his VPS to MT5 to your VPS through the copying software that MT5 has, the price might have moved and you might lose a big chunk of what you hope to gain on that short trade, that very quick trade. So I would definitely not want to recommend taking this as a signal. I wouldn't take it as a signal. If I were going to use this, I would certainly invest in the EA. It's cost $290 or you can rent it. So to me, that's a no-brainer. If you want to try out a scalper and you want to try out this scalper, buying the EA is the way because then you're going to get much better execution. Have a fast VPS, have a good broker. All right, so what else can we look at here? We've already looked at, I think, everything I wanted to say about this EA. Hopefully I'm not forgetting anything. Let's look at the scorecard briefly. Gradient averaging, I don't see any. And by the way, a caveat is I haven't run this EA live. I'm only examining what I can see on mql5. So that's all I know. I don't own this EA and I have not run this EA. No martingale that I can see. It has a stop loss, so again, a 10, getting great scores here. Average hold time, less than an hour, another 10. Monthly profit to drawdown. Actually, I probably should have scored it a little higher here even. Something like a 1 to 8, but that's its max, and it looks like from looking at the risks tab that it doesn't go into this level of drawdown very often. So probably I could have even given it a higher score here. I gave it a 4, which gives it a 24 on this line. Average drawdown, low to medium. That drawdown is only for a short time because the trades are short. It's not holding the drawdown for a week or something like that. Or like, for example, the Ranger EA has been in a drawdown for, I think 3 weeks now, it's in some massive drawdown. So it's not going to hold long drawdowns. It doesn't look like it would ever do that because it's got a strict stop loss. It's just going to exit. If it's not in a winning trade, it'll take a loss. If it's in a winning trade with that trailing stop, it'll win a little, or maybe even if you're lucky, win a lot. So I like that. Average drawdown, gave it a 7. Overall opinion here, I gave it a 5. I think this is already maybe the highest rated EA I've ever reviewed. I want to back that down a little bit. I don't think it's the best EA I've ever reviewed. I can't say that, but I can't say it's a bad EA. I mean, if you want to run a scalper, it's definitely competes with Fury. I like Fury better, but I can see it's right in the game with Fury as a good scalper. This is low pips. Execution is a big risk. I should also put that in capital letters. Big risk. But it's been profitable for a long time. It's been running profitable since 2016. So I gave it a 5 here, which made it a 35, gave my total score a 226. I would say, guys, I would rate this more in the range of something like Fury as in terms of how good it is, maybe even a little below Fury. So I think there's something wrong with my grading card. I obviously am always on the lookout for EAs that make pips and that make money and don't have a lot of leverage in drawdown, or at least don't hold that leverage in drawdown for very long. So I like this type of EA because it's not the type of EA that's going to blow an account. It can lose money. It certainly can. I mean, when we looked at those monthly results, it's lost money. You can see there's huge. This is a 28% losing month. Imagine how it would feel if you were running it at this level of risk that he's running it at for this account, and your account, let's say you had a, I don't know, $10,000 account, and you lost $2,700 in a month. You'd be aghast, right? It would be just a terrible result. So, and this month, look, another 28% loss. So here, a 15% loss followed by a 13% loss. And you can see this equity curve, it's not all to the moon. It went up and then it went down a lot. So if you're someone running this thing with this kind of risk, which in my opinion is too high for this to be running anyway, I wouldn't play this level of risk. Even if I owned the EA, I'd never play that level of risk. But the point is, you can't just turn this on and go walk away whistling and think your fortune is made. This thing can absolutely take losses, but it's probably never going to blow your account just because it's in and out so quick. It could have 1, 2, 5, or more, 20 losing months in a row, especially if you have got it on a broker that is not going to give you good execution, or running on a VPS with low latency to your broker and a slow VPS. Lots of things could intervene here to make this lose money. So it's certainly vulnerable to losing money. But overall, I would say it's a pretty safe EA because it's probably not going to blow your account. Just watch it and make sure you're getting good execution, that your results look like the live account. So if you lose 10% in a month and the live account has lost 5% or 15% or 10% that month, somewhat kind of looks like your result, then probably you can feel pretty confident that in the long run you're going to make money with this thing, because the live account has clearly made money in the long run with this EA. So having said all that, you guys know how I like to trade. I like to trade multiple EAs. I like to trade a lot of my own EAs that I've written. I could see myself, putting this EA live on one of my accounts, but giving it a much, much, much smaller risk than it has on this account. I hope this review helped, guys. I need to do, please like and subscribe. I should have said that earlier. It really helps if you like and subscribe. Love to hear your questions and comments. I have some more ideas for videos coming up for you guys. Hope you enjoyed this one. Thank you.